If you had to pick one Midwest market to build your entire real estate portfolio in 2026, what would it be? Louisville or Indianapolis or another city? Well, today I'm going to talk about these two cities and how they offer completely different opportunities. One that is better for beginners who want easier deals, and the other that is perfect for experienced investors who want volume. I'm going to break down the real data from both markets and show you what's actually happening on the ground and help you decide which one fits your investment strategy. Both cities will make you money in 2026, but the question is, which one matches how you like to do business? Here's some Louisville market data and what the numbers actually show. Home prices have been rising steadily, but not crazy. We're seeing a healthy appreciation of around 7% a year. Not the wild swings you get from the boom markets, of course, just steady growth that's perfect for cash flow investors. But here's what's really interesting. Prices peak in the summer and then cool down in the fall. This seasonal pattern tells you the market is stable and predictable and not overheated like some of the coastal markets. Way more houses are hitting the market after years of being super tight with barely any inventory for sale. Louisville now has way more options for buyers. We're talking about a 34% jump in available homes compared to 2024. Now, this means there are more choices and less competition from other investors and sellers who are actually willing to negotiate instead of just waiting for the next buyer who's going to overpay for the property. Now let's look at Indianapolis. And the story is completely different. Home prices have basically stagnated, stopped growing altogether. We're seeing almost flat appreciation, less than 0.5% growth year over year, and some areas are even seeing small price drops. But here's why this is actually great news for investors. When prices flatten, sellers get more motivated. But Indianapolis now has the most available homes in 5 years. That's 27% more inventory than 2024. And here's what's interesting. Over half of all listings have had price reductions. That means sellers started way too high and are now coming back down to reality. So that means you have motivated sellers and negotiable prices, and as a buyer, that's some serious leverage. This is exactly the environment where creative financing and BOFSLO can thrive. So what kind of opportunities does Louisville offer? First, it's perfect for creative financing for beginners. Louisville sellers are more relationship focused and less transactional. They care more about you solving their problem than squeezing every dollar out of the deal. The sweet spot here is houses between $150K and $230K, which, by the way, are perfect for BOFSLO deals. You'll find a lot of tired landlords who went out of the rental business altogether, property owners who bought their houses decades ago and own them free and clear. Louisville also has way less competition, and the outskirts are great too. You're not fighting against hundreds of other investors on every deal. The rental market is strong, and you can buy a $200,000 house and rent it for $1,500 a month, often more. That's real cash flow that actually puts money in your pocket every month. Now, Indianapolis offers a different set of opportunities. This is a bigger market with more volume. You'll find more leads and more deals and more opportunities to scale quickly. But it also means more competition and sellers who know the game better. The big advantage, Indianapolis is perfect for subject to deals, or homeowners still have mortgages on their homes and their properties. And with the market slowing down, people need quick exits for debt relief. And while cash on cash returns can look like 7 to 10%, you know us, we're getting payments over time and we're putting little to no money down. So those type of returns look way better than that. The median price home is around $250,000, which means you're getting into quality neighborhoods without breaking the bank. And Indianapolis has stronger job growth. Major companies keep expanding there, meaning steady tenant demand and long-term stability for your investments. Here's where these markets really shift: the type of sellers that you're dealing with. In Louisville, you'll deal with a lot of homeowners and landlords, blue-collar folks who want straightforward solutions. They're just willing to give you more time to pay them more money, with low down payments, monthly payments, and a good price over time. In Indianapolis, you'll find a lot more business-minded sellers. There's a lot more out-of-state landlords, more investors in the market, and sellers who expect multiple offers. They want to see the math and understand exactly how the deal works. Louisville gives you easier conversations and better terms, and Indianapolis gives you more volume but requires stronger negotiating skills. Both approaches work. Depends on whether you prefer relationship building or number-focused negotiations. Both you can get really good at. Let's talk about the rental demand, because that affects how you exit your deals. Louisville's rental market has been growing steadily, and just across the river, by the way, on the Indiana side is great too. Rents continue to increase significantly over the last few years, but have now stabilized at around 2% per year in annual growth. The average rent is around $1,300 to $1,400, and you can still find affordable options under $1,000. Indianapolis rents are slightly higher, but not much, and they're having a little bit stronger annual growth of about 4%. The rental market there is red hot. Well, it has cooled to more sustainable levels. Both cities have strong rental demand from young professionals and families who want to buy but can't traditionally qualify for mortgages yet. This makes lease options extremely attractive in both markets. The difference? Louisville has a little less competition among investors offering rent-to-own deals, and Indianapolis has a little more volume, so you might have thinner profit margins in some neighborhoods. Both work well. So which market should you choose? Choose Louisville if you're newer to creative financing and want easier negotiations and prefer building relationships with sellers. It's perfect for BOFSLO deals with seller financing and investors who want less competition. And again, don't bypass the outskirt areas. However, if you're more experienced, perhaps choose Indianapolis, where you want more volume and can handle sharper negotiations. It's ideal for a lot of terms deals, owner financing, subject twos, wraparound mortgages if you want to scale quickly. So, if you want easier deals with better terms and less competition, start in Louisville. If you want opportunities and don't mind working harder for each deal, go to Indy. Both markets make you money in 2026. The key is picking the one that matches your personality and experience level. While everyone else is still fighting over expensive coastal markets, smart money is quietly moving into these Midwest gold mines. But this window won't stay open forever. By mid to late 2026, a lot of these opportunities will be being seized by bigger players. If you need help getting into one of these markets, join my free live training coming up next week, and I'll show you exactly how to analyze deals and find motivated sellers and structure creative deals in both markets or a different market altogether that you've picked. The best opportunities are those where others aren't looking. Go take action today, and if you want to see how creative financing is changing this year, go watch this video. I'll show you there.